Have you ever wondered how a single decision can move billions of dollars in mere seconds? Today, I'm taking you inside a financial earthquake that just rocked Wall Street and Silicon Valley. What if I told you that with just a few words, President Trump caused Apple's stock to jump 2.2%, Ford to surge 4%, and sent the Dow Jones soaring over 300 points? What happened behind closed doors at the White House that triggered this market frenzy? How did tech CEOs like Tim Cook and Jensen Huang respond when they woke up to this game-changing news? And most importantly, what secret strategy are global business leaders using to protect their companies from the unpredictable trade war roller coaster? In the next 15 minutes, you'll not only discover the high-stakes drama unfolding in boardrooms across America and beyond, you'll also master the exact vocabulary, expressions, and business English that international executives are using right now to navigate this economic storm. Welcome to Story-Driven English, where we transform breaking news into your most powerful language learning tool. I'm host name, and today's story will revolutionize how you understand both business English and global economics. Before we dive in, if you're serious about taking your English to the professional level, hit that subscribe button and notification bell right now. Our channel provides weekly immersive English lessons through real-world stories that traditional textbooks simply can't match. Over 75,000 professionals worldwide have accelerated their English fluency through our story-based approach. Will you be next? Let's begin our journey into market reactions, the Trump tariff roller coaster. Market reactions, the Trump tariff roller coaster. The early morning sun cast long shadows across Wall Street as traders hurried into their offices, phones buzzing with notifications. Sarah Chen, a senior analyst at Atlantic Capital Partners, scanned the headlines on her tablet while waiting for the elevator. Another day, another tariff announcement, she muttered to herself, noting how the futures market had already begun reacting to President Trump's latest proclamation. The trading floor was a hive of activity when she arrived. Multiple screens displayed the major indices, all showing early signs of upward momentum. The Dow Jones Industrial Average futures indicated an opening rise of over 200 points, while S&P 500 and Nasdaq futures similarly pointed to a strong start. "Have you seen the news?" asked Michael Rodriguez, her colleague who specialized in tech stocks. His eyes were wide with excitement. Trump just exempted electronics from the China tariffs. Smartphones, computers, memory chips all exempt. Sarah nodded, scrolling through the official release from U.S. Customs and Border Protection. This changes everything. Apple shares are going to soar today. As the opening bell rang, her prediction proved correct. The broader market began climbing, with technology stocks leading the rally. By midday, the Dow had gained over 300 points, the S&P 500 was up 0.8%, and the Nasdaq Composite had added 0.6%. At Atlantic Capital's midday strategy meeting, the discussion centered on how long this exemption might last. The guidance was unclear about whether this is permanent or temporary, noted Eleanor Wright, the firm's chief economist. Commerce Secretary Lutnick hinted on Sunday that it might be just a temporary measure. "Classic Trump negotiating tactic," said William Parker, a veteran trader who had been with the firm for over 20 years. "Give a concession, see how the other side responds, then recalibrate." He's treating global trade policy like a real estate deal. Sarah pointed to the surge in Apple stock, which had climbed over 2% by this point. The market obviously believes this exemption matters, regardless of whether it's temporary or not. Dell, Micron, all the major tech hardware companies are up significantly. Back on the trading floor after the meeting, Sarah noticed another headline flashing across the screens: Trump signals possible auto tariff pause. He's looking at some tariff pauses to help car companies, read the alert from the financial news service. The market reaction was immediate, with shares of Ford jumping 4% and General Motors rising 3.2% within minutes. Sarah quickly messaged Rodriguez, auto stocks taking off. New sector rotation opportunity. By late afternoon, a pattern was emerging across global markets. European indices had followed Wall Street higher, with Germany's DAX home to BMW, Mercedes, and Volkswagen, rising particularly strongly. Asian markets, which had closed before the U.S. announcements, were set to open higher the next day, with futures for Japan's Nikkei and Hong Kong's Hang Seng both showing solid gains. It's remarkable how quickly sentiment can shift, Sarah commented to Eleanor as they analyzed the day's data. Just last week, we were seeing panic selling after the initial blanket tariff announcement. Eleanor nodded thoughtfully. The markets hate uncertainty above all else. These exemptions, even if temporary, provide a framework that investors can plan around. It's not ideal, but it's better than the chaos we saw last week. As the closing bell approached, Sarah noticed another significant announcement scrolling across the news ticker. Nvidia to make AI supercomputers entirely in US. That's a major strategic shift, William remarked, peering over her shoulder. Nvidia positioning itself to avoid future tariff complications. Smart move, but it will take time to build that domestic production capacity. Nvidia's stock had initially dipped on the news, reflecting investor concerns about the costs associated with reshoring production, but recovered by the close, ending slightly higher as the market processed the long-term strategic benefits. The closing bell rang, confirming a solid day for U.S. equities. The Dow Jones Industrial Average had gained 312 points, or 0.78%, while the S&P 500 rose 0.79% and the Nasdaq Composite added 0.64%. As the trading floor gradually emptied, Sarah remained at her desk, preparing a report for clients. Today's market reaction demonstrates both the immediate and potential long-term impacts of the evolving tariff situation, she wrote. The exemptions for electronics significantly benefit U.S. technology companies with exposure to Chinese manufacturing, while the potential pause on auto tariffs similarly supports domestic automakers. Meanwhile, Nvidia's decision to reshore AI supercomputer production represents a strategic corporate response to the new trade environment. The White House chess game, calculating the next move. Inside the West Wing of the White House, the atmosphere was tense but controlled as President Trump's economic team gathered in the Roosevelt Room. Charts and projections covered the walls, and multiple laptops displayed real-time market data. The tech exemptions have had the desired effect, said Commerce Secretary Howard Lutnick, gesturing to a screen showing the day's market performance. The Dow is up over 300 points, and we're seeing particular strength in electronics manufacturers. President Trump nodded, studying the figures. Good. Very good. But remember, these are tactical moves, not permanent commitments. We need to maintain leverage with China. The President's chief economic advisor, Jennifer Sullivan, cleared her throat. Mr. President, I've prepared an analysis of how your comments about potentially pausing auto tariffs affected the market today. Ford shares jumped 4%, and General Motors is up over 3%. Excellent, Trump replied, a smile spreading across his face. The auto industry needs our help. They employ thousands of American workers in key states. But, sir, interjected Treasury Secretary James Wilson, we should be cautious about sending mixed signals. If we keep introducing exemptions, it might undermine our overall negotiating position with China and other trading partners. Trump waved dismissively. James, you worry too much. This is how I've always done business. Keep them guessing. One day tariffs, next day exemptions. It's all about creating uncertainty for them, not us. The meeting continued as advisors presented data on various sectors of the economy and how they were responding to the evolving trade situation. National Security Advisor Robert Mitchell brought up a point about technology independence. Mr. President, Nvidia's announcement today about building AI supercomputers entirely in the U.S. aligns perfectly with our goal of ensuring American technological leadership isn't dependent on foreign supply chains. Very good. We should encourage more companies to follow Nvidia's lead, Trump replied. Talk to my team about potential incentives we can offer for reshoring production. As the meeting wound down, the president asked about developments at Harvard University, where his administration had frozen $2.2 billion in funding after the institution rejected certain demands. They're fighting back, sir, reported Education Secretary Thomas Green. They've released a statement saying they'll challenge our decision. Let them, Trump said confidently. They've had it too easy for too long. Our educational institutions need to remember who provides their funding. The meeting adjourned with the president instructing his team to continue monitoring market reactions and prepare for potential responses from China and other affected nations. As officials filed out, he called Secretary Lutnick back. Howard, make sure our messaging on the tariff exemptions remains deliberately ambiguous. I want Beijing guessing whether this is a temporary goodwill gesture or a permanent policy. Same with the Europeans on the auto tariffs. Lutnick nodded, understanding exactly what the president wanted. Consider it done, sir. I'll emphasize that all options remain on the table. Silicon Valley responds. Adaptations and innovations. The sprawling Cupertino campus of Apple Incorporated buzzed with activity despite the early hour in California. CEO Tim Cook had called an emergency executive meeting to discuss the implications of the tariff exemptions announced overnight. This is welcome news, but we can't assume it's permanent, Cook cautioned the assembled executives. The language in the official guidance is deliberately vague. We need to continue our supply chain diversification efforts while taking advantage of this reprieve. Apple's chief financial officer, Luca Maestri, presented figures showing how the company's stock had already risen 2.2% in pre-market trading. Our suppliers are also seeing significant gains. Foxconn shares are up 3% in Taipei trading. As the meeting progressed, discussions turned to how the company should respond publicly. We need to acknowledge the positive impact of these exemptions without appearing too politically aligned, advised Apple's communications chief. A simple statement welcoming policies that benefit American consumers and innovation should suffice. Meanwhile, across Silicon Valley, similar discussions were taking place in boardrooms and executive suites. At Nvidia's headquarters in Santa Clara, CEO Jensen Huang was briefing his team on the company's bold announcement to manufacture AI supercomputers entirely within the United States. "This is a significant strategic pivot for us," Huang explained, "but one that serves multiple purposes. First, it insulates us from future trade tensions with China. Second, it positions us favorably with the current administration's focus on domestic manufacturing. And third, it gives us greater control over our most sensitive intellectual property." The executive team nodded in agreement, though Nvidia's chief financial officer raised concerns about the short-term costs. "This will require significant capital expenditure. We're looking at billions in new manufacturing facilities, and our margins may be impacted in the near term." "True," Huang acknowledged, "but we have to think long-term. The current pattern of tariffs and exemptions is too unpredictable for us to base our business model on. We need certainty, and the only way to achieve that is to bring critical production in-house and onshore." At Dell Technologies' headquarters in Round Rock, Texas, founder and CEO Michael Dell was on a conference call with his global supply chain team. "These exemptions are good news for us in the short term," he said, "but I want to accelerate our supply chain diversification program regardless. Vietnam, Thailand, Mexico, let's continue building capacity in all these locations." Dell's chief supply chain officer, Karen Wong, shared data showing how their partially diversified manufacturing had already buffered them against some of the worst potential impacts of the initially announced tariffs. "Our Malaysia facility is now handling 22% of our laptop production, which would have allowed us to absorb some of the tariff impact even without these exemptions." Michael Dell nodded thoughtfully. "Good work, but let's not get complacent. The lesson here is that trade policy can change overnight. Our strategy needs to prioritize flexibility and redundancy." As these discussions unfolded in tech company boardrooms, a parallel conversation was happening among semiconductor manufacturers. At Micron Technology's Boise headquarters, executives were analyzing how the exemption for memory chips would affect their global operations and strategic planning. "While this exemption is beneficial, we should continue our $100 billion investment in U.S. manufacturing capacity," asserted CEO Sanjay Mehrotra. "The CHIPS Act funding makes domestic production increasingly competitive, and today's policy developments only reinforce that the future of semiconductor manufacturing will include a significant American component." By mid-afternoon in California, a new announcement caught the attention of tech executives across the valley. Harvard University had publicly rejected the Trump administration's demands and now faced a $2.2 billion funding freeze. The news sparked concerns about potential impacts on the tech talent pipeline and research partnerships. Several major tech companies had significant research collaborations with Harvard in artificial intelligence, quantum computing, and other advanced fields. "This is concerning," noted Jensen Huang during an afternoon briefing. "Harvard's research programs are vital to the AI ecosystem. We should monitor this situation closely and evaluate whether we need to adjust our university partnership strategies. As the day drew to a close on the West Coast, major tech executives received another piece of significant news. President Trump had indicated he was exploring ways to help the U.S. auto industry through tariff adjustments. This development, while not directly related to the tech sector, signaled a potentially broader pattern of selective tariff enforcement and exemptions. If he's making these kinds of exceptions for multiple industries, it suggests a pattern, observed Tim Cook during a late call with his government affairs team. We need to continue engaging constructively with the administration and articulating how our industry benefits American innovation, job creation, and consumer interests. Global repercussions. Markets and allies react. As dawn broke over Tokyo, Japanese traders were already analyzing the overnight developments in U.S. trade policy. The Nikkei 225 index opened sharply higher, with technology stocks leading the gains after news of the electronics tariff exemptions had spread. Haruto Tanaka, chief investment strategist at Mizuho Securities, was being interviewed live on NHK, Japan's national broadcaster. President Trump's decision to exempt electronics from the China tariffs provides significant relief for Japanese tech manufacturers with global supply chains, he explained. Companies like Sony, Panasonic, and Hitachi all rely heavily on Chinese components and assembly. When asked about the news that Trump might pause tariffs on the auto industry, Tanaka's expression brightened noticeably. If confirmed, this would be extremely positive for Toyota, Honda, and Subaru, all of whom export significant volumes to the U.S. market. The mere suggestion sent their shares up 3 to 4% this morning. Similar scenes were unfolding across global financial hubs. In Frankfurt, Germany, the DAX index had opened up 1.2%, with automakers BMW and Mercedes parent Daimler among the top gainers on hopes of potential tariff relief. European Commissioner for Trade, Sophia Loren, was holding an emergency meeting with her team in Brussels. These selective exemptions complicate our response strategy, she told them. On one hand, electronics exemptions benefit many European companies with exposure to Asian supply chains. On the other hand, the uncertainty around auto tariffs leaves a major European export sector in limbo. Her deputy, Marco Bellinelli, offered a perspective. This appears to be classic Trump negotiating tactics, creating uncertainty, then offering selective relief to maintain leverage. We should prepare both for improved dialogue opportunities and continued pressure points. Meanwhile in Beijing, Chinese officials were analyzing the electronics exemptions with cautious optimism. The Shanghai Composite Index had closed up 1.8% before the U.S. announcement, and futures indicated it would open even higher the next day. At a hastily arranged press briefing, Chinese Commerce Ministry spokesman Liu Wei offered a measured response. We note the exemptions for certain electronics products and view them as a small step in the right direction. However, we continue to oppose unilateral tariffs as a whole and urge the U.S. to return to dialogue and consultation to resolve economic and trade differences. Behind closed doors, however, Chinese leaders were conducting intensive analysis of what these selective exemptions might signal about U.S. strategy. President Xi Jinping convened his economic team to discuss potential responses. The electronics exemptions suggest several possibilities, noted Vice Premier Liu He. Either they've realized the economic damage these particular tariffs would cause to American companies and consumers, or they're trying to divide industries against each other to weaken opposition to the overall tariff strategy. The discussion turned to Nvidia's announcement about manufacturing AI supercomputers entirely within the U.S. This represents a concerning trend, observed the Minister of Science and Technology. American technology companies are being incentivized to reduce their dependence on Chinese manufacturing and supply chains, potentially accelerating technological decoupling. Economic analysts weigh in. The bigger picture. At the prestigious Peterson Institute for International Economics in Washington, D.C., a panel of experts had assembled for an emergency webinar on the evolving trade situation. The virtual room was filled with hundreds of attendees from government, business, and academia. Dr. Eleanor Montgomery, the Institute's director, opened the session. Today's exemptions for electronics and potential pauses for auto tariffs represent a significant evolution in the administration's approach. We're here to analyze what this means for the U.S. and global economies. The first speaker, Dr. Robert Chen, a trade economist, shared his screen showing various economic models. Our initial analysis suggested that blanket tariffs of the magnitude initially announced could reduce U.S. GDP growth by up to 1.2 percentage points over the next year. These targeted exemptions, if maintained, could reduce that impact by approximately one-third. Former U.S. Trade Representative and panel member Jessica Donaldson added historical context. What we're seeing is reminiscent of President Trump's first-term dramatic announcements, followed by selective implementation and exceptions. The key difference now is that both domestic and international businesses have experience with this playbook and may be better prepared to navigate the uncertainty. The discussion turned to Nvidia's announcement about onshoring AI supercomputer production. Dr. Samantha Wilson, a technology policy expert, offered her perspective. This may be just the beginning of a larger reshoring trend in critical technology sectors. The combination of trade tensions, national security concerns, and government incentives like the CHIPS Act creates powerful motivation for companies to bring strategic manufacturing back to the U.S. A question from the virtual audience addressed the Harvard funding freeze. How might this action against Harvard affect U.S. competitiveness in tech and innovation? Dr. Wilson responded thoughtfully. That's a critical question. Harvard and other elite research institutions are fundamental to America's innovation ecosystem. They train top talent and conduct foundational research that often leads to commercial breakthroughs. Disruptions to their funding could have long-term implications for technological leadership, particularly in fields like AI, biotechnology, and quantum computing where academic research plays a vital role. As the webinar concluded, Dr. Montgomery summarized the key takeaways. Today's developments suggest we may be seeing a more nuanced approach to trade policy than initially indicated. Markets have responded positively to these selective exemptions, but significant uncertainty remains. Companies are adapting by diversifying supply chains, considering reshoring options, and building more flexibility into their operations. She concluded with a broader perspective. What we're witnessing is not just about tariffs and trade balances. It's about the reconfiguration of global supply chains, technological ecosystems, and ultimately economic power. The decisions being made today will shape global commerce and innovation for decades to come. Key vocabulary, repeated throughout. Tariffs, taxes imposed on imported goods. Exemptions, freedom from an obligation or liability imposed on others. Market rally, a period of sustained increases in the market. Supply chain, the network of organizations, people, activities, information, and resources involved in delivering a product or service. Diversification, the practice of varying investments or business activities to spread risk. Indices, singular, index. Numerical scales used to compare variables or track performance. Semiconductor, a material with electrical conductivity between that of a conductor and an insulator. Reshoring, the practice of transferring a business operation back to its country of origin. Leverage, the use of influence to achieve a desired result. Uncertainty, a situation involving imperfect or unknown information. Strategic, relating to the identification of long-term aims and interests and the means of achieving them. Volatility, liability to change rapidly and unpredictably. Ecosystem, a complex network or interconnected system. Innovation, the introduction of new methods, ideas, or products. Negotiating tactic, a planned method used to gain advantage in discussions. Thank you for joining us for this in-depth exploration of how global markets and corporations are responding to shifting trade policies. As we've seen, the business world must constantly adapt to political and economic uncertainties, making strategic decisions that balance short-term challenges with long-term objectives. The story of these tariff exemptions reminds us that in the interconnected global economy, even seemingly small policy changes can send ripples through markets worldwide. From Wall Street traders to Silicon Valley executives, from White House strategists to international allies, each player in this complex ecosystem must carefully calculate their next move. For language learners, these real-world scenarios provide not just vocabulary and business terminology, but context for understanding the nuanced language of global commerce, diplomacy, and strategic decision-making. Did you find this story helpful for improving your business English vocabulary? We'd love to hear which parts resonated with you most. Please give this video a thumbs up if you enjoyed learning English through this current event story. Your likes help our content reach more English learners worldwide. Don't forget to share this video with friends or colleagues who are working on their business English skills, especially those interested in economics, technology, or international relations. Have questions about any of the vocabulary or concepts covered? Drop them in the comments below. We read every comment and use your feedback to create future content. Most importantly, if you haven't already, please subscribe to our Story-Driven English channel and hit the notification bell. We release new story-based English learning videos every week, covering everything from business and technology to culture and entertainment, all designed to improve your English while exploring fascinating real-world topics. Remember, the best way to master English is through consistent exposure to authentic, engaging content. We'll see you in our next story.